Good morning, everybody, and welcome. This is the Saturday morning Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we're going to knock out our standard disclaimer before we can show charts and trades. So let's get that out of the way right now. All communications for Viper trading systems are for educational purposes only. Futures trading does involve risk, and there is a risk of a loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Now, on Thursday evening, last Thursday, was part one of this series, which is entitled How and When to Scalp Trade. So what we're going to do is first we're going to get over to an ES chart. We were not able to get to some instruments on Thursday evening. And let me get over to screen one. One of the ones that we're looking at, that we had requested was ES, the E-mini S&P. 1250 a tick. We just rolled all the equities, if you are trading the equity markets, to the September contract. So you want to make sure if you're trading these. Hold on a second. Sorry about that. If you're trading the equity markets, so specifically we're talking about YM, the Russell, RTY, NASDAQ, and Q, and ES. Those are the four that we mainly focus on. All the equities have rolled to September, so you may want to make sure you're on those contracts. I'm going to do a brief, 2-minute overview. If you need to go back and understand more detail about how to decide whether to scalp or not, that was covered in part one, so you're going to want to watch part one. It's on both the web and the subscriber area, so I'm not going to cover that in a lot of detail. I'll do a quick recap, and then we're going to move quickly into trade call exercises on these various instruments. So what you're looking at here, if you're new to Viper, and even new to futures trading for that matter, we are connected to a data feed to our broker. And that renders this data right here. This is a 4-range chart. We don't use time-based charts. We feel that artificially sort of distorts the picture of the volatility. So we went to range bar charts a long time ago, and we really like that. And if you just connected straight up to a data feed and brought up a chart, you would just see bars. Okay, you wouldn't see any of these colors. The predictors, you wouldn't see any of this. It would just be random sort of bars moving around on the chart. It'd be very difficult to try to make trading decisions because you wouldn't really know what to do. So we created these indicators to help make trading decisions. And how this works is this. Excuse me. I got a tickle in my throat this morning, so I need a sip of tea here. Hold on a second. So what the Viper indicators are the background colors. So we basically have scripts written in C#. It's kind of like apps on an iPhone. Think of it kind of like that way. And our scripts run on the NinjaTrader platform. So in that sense, iOS on Apple's phone is like NinjaTrader to us. And so our apps, our little scripts run on top of it. So for instance, some of the scripts are the background colors, the bar colors, the mid band with all the bands above it, 4 above it, 4 below it. The predictors, which are support and resistance in real time, toggle those on and off, just like such. For now, I'll leave them on. And the swing levels, the power meter is not on right now because I'm not connected to a data source. I had issues, data connection issues this morning. So we'll have the data on here, but like the power meters won't be showing up because I'm not connected. The swing levels, everything you see here, this is all Viper scripts that are producing everything you see here. So at a very high level, how we trade this, very rudimentary level, which I think everybody hopefully understands, is that we are what you call retracement traders in trends, Now I'm just going to go ahead and put this down in the middle of this chart, so it's kind of the foundation on which we build our trading. So markets exhibit two main types. There's several types of behaviors that they exhibit, but the two main ones are trends. So a market could be trending. And generally when it's trending, you take retracement trades. And we'll show that. And you try to get runners. Runners are the trades that go for some distance and have trail stops and are managed in that way. And then you have ranges. This is also called consolidation, sideways. There's a lot of different names. Let's just call it range-bound market. Now, in a range-bound market, you're generally looking for your scalps, scalping type trading. At support and resistance. Excuse me. Support and resistance. Okay. So with this knowledge in hand, it is critical for us to know at any given point what the market is doing. Is the market trending? If it is, we are generally looking for retracement type trades, and we are looking for runners. And then, of course, let me add the secondary part of this, which is you have to discern very quickly: is it going up or down? Right. So if it's trending, is it going up or down? And we're going to look at that very quickly here. All right. So generally speaking, when a market is going down, you are going to see a red background. So here's a good example right here on ES of a downtrending move. What generally happens is that first you have a thrust in a given direction. In this case, it's down. And then you have the pullback, what's called the retracement, like such. Let me take these predictors off just for a second. Okay. Now, the key in getting into trend trades is that at any given point in real time, we don't know how deep a market is going to retrace. So here's how we look at it. And you have to be prepared for all three conditions. There are conditions, and they center around the midband. So if you're going to draw a sweet spot of trades around the midband, it might look something like this. On the very lowest end, we have what are called shallow trades. These are trades that don't come very deep and don't hit the midband. Excuse me. We have examples of midband trades where it does come exactly to the midband. It kind of sits there for a little while. We can engulf it with a region box using our object trader tool. That's sort of the preferred method. It's my favorite trade by far. The midband region box is by far my favorite trade. And then, of course, we have trades that come deeper. They can come all the way as far as the outermost band in the other direction. That's called a phantom. We'll talk about that in a bit. But if it doesn't quite get that far, it can go up in this area right here. And occasionally the bars can turn another color. So for instance, in a downtrend, the bars are predominantly red. Going down, stair-stepping down, red bars, occasionally get yellow bars. So now the criteria for the shallowest retracement in the trend is that you have to pierce line 2 for a short, which is the thin line right here, and the stealth line, which is this little sort of sneaky snake line right here. See the sort of red snaky line? That's called stealth. It's part of the indicators. So it has to pierce that, and it has to pierce that and close above it, and hopefully stay above it for some period of time in order for us to draw a little box. Here's another example here. this is an acceptable depth of retracement to go ahead and short the market at the very shallowest end in a downtrend. Now, conversely, and we'll look at this in a minute, in an uptrend, the pullback has to pierce the green stealth line, which is the snaky green line in an uptrend, and it has to pierce line 6. That would be the shallowest end in an uptrend. We'll look at examples of that in a minute. All right, so quick question, make sure everybody's in the pop quiz, make sure everybody's awake here. Let's look at this area right here. Is this an acceptable short trade on a retracement? This area right here? Yes or no? I'll give you 5 seconds. Is that acceptable? Is this a yes or a no short trade? Acceptable level of retracement, yes or no? Just a Y or an N. Bap. Type it in. You got 4 seconds. It either is or it isn't. 3 seconds. I'm going to do a series of these quick quizzes like this. As we go through learning how this works, you got to be prepared to pop in a quick answer whether you got a trade or not, right? Is this a come Monday morning, if you're trading ES and you get something that looks like that, are you going to take it, yes or no? 2 seconds left. Does it meet our criteria? First pop quiz of the morning here. 1 second. Time's up. Good. Everybody in here said yes. Perfect. Yes. Okay, good. So it meets our criteria. It pierced line 2, came through the stealth, closed above it for some period of time, allowing us to draw a region box, short enabled only. If you drew it as I showed, depending on when you drew it, you were either filled short on the close of one of these, well, one of these bars right here would have filled you short on a market order from Object Trader. Perfect. Now, there's other ways to get in. I'll just quickly say what they are. If on a quick moving market, sometimes you don't have time to draw a box and you want to get in. You can hit a market order up here and just get in it, okay? And then make sure you put your stops 10 ticks up here, whatever. You know, you don't have to go that far if you're manually doing it. You can go up to here. Just go near, find the nearest swing and put the stop up here. It's better to use Object Trader because it'll do all that for you. But if you're in a hurry, you can also put a limit order here, right? You can put a limit sell order underneath the box, just like that, and it'll fill you. But then you're going to have to put your targets and stops in yourself and manage them accordingly. So if you can, what I'm saying is, just to be explicitly clear, if you can learn how to use the Object Trader tool, that's the preferred method because it's semi-automated in the sense it's going to do everything once it takes the trade, manage it for you. But there are other ways to get in. The market order and the limit order are the easiest. Okay, so in the case of the trend, and all trades are done as follows. The ideal condition would be as follows. And I'll just say this once because the management of the trade is almost exactly the same on every single trade, and it goes like this. In the case of this short right here, you have enabled, you draw a region box if there's sufficient time. And let's see if there was. This region box started to form at roughly, well, this was overnight. It was like 45 minutes after midnight Pacific time. There's your night owls trading. And it didn't start to break down until 54 minutes. So it sat here for a good 8-9 minutes. Plenty of time to draw a region box, assuming you're awake. All right, so it fires the short order, and you're filled short at 68 even. Now, if you have 2 contracts on, which is the ideal condition, Object Trader will take and place whatever you have set. The default is 12 ticks. So 12 ticks above here would be 71. Okay, so your initial 2-lot stop would be positioned right there. So a market order would go in on ES, sell 2 at market on the close of this bar right here. Object Trader or you manually would put 2 contracts, a buy stop up here, 12 ticks above here. That's called your initial stop. And in the case of ES, your scalp trade, which is the first contract you're going to want to pull off at either 4, 5, or 6 ticks. Now, most other traders like NASDAQ and YM that have the larger movement, you can put it out as far as 8 or 10 ticks because that first pop is generally going to be larger, almost twice as much as ES. So let's go down 8 ticks from here. Let's go down 6 ticks from here. Excuse me, 68 would be 67, 66.50 would be 6 ticks. Now you could go, let's see, 68, 8 ticks would be 66 even. Okay, so your scalp would come off right here. This is your first trade. Now, in that sense, when we say scalp in this sense, in the case of a trend move, so just to be clear, what I'm saying here is that Object Trader would put the 6 or 8 tick target right here, and as it came through it, it would fill it like that. Now, the actual action that is taken is that after this is filled, it's OCO on the one cancels the other. So the stop on the first contract would be taken off here. You would no longer have 2 here. Now, what you want to do is the first thing to do is you want to get this second stop on your second contract on your runner down to within 2 or 3 ticks of your entry. That means it would move from here to here. And then you would begin the trail process on the runner. So what I'm saying is that after you hit your scalp, first lot taken off, this goes to 1 stop. It comes to here initially, and then you want to trail the stop on down. Now, I have to say that the trail process is somewhat, sort of half art, half science, in a sense that you want to be tight enough to lock profits down, but you want to be loose enough to let the market move around. Now, what do I mean by that? Notice how that within the context of this overall move down like this, that there are several periods where it makes sort of mini thrusts and retracement, like here. Thrust, retracement, thrust, retracement, thrust, retracement. Now, what you would do is you would take this stop, and now you can program Object Trader to do this automatically. So you won't have to do anything. It will just do it. It'll just move it. It's pretty cool to watch, too. If you're doing it manually, notice how you have line 2 here, this thin line that is red, and you have the stealth line here, the sneaky snake line, right? It is the combination of those two that form the basis of the trail stop. So in this case, it would look like this. It would trail down following line 2 and stealth, 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 and then the close on one of these bars here would have got you out of the trade. That is the mechanics. I'm not going to do every single trade like that, because what I'm going to assume is that you're going to remember this is how we do it, because every trade is executed just like I showed. The only difference being this. If initially your trade up here is only 1 lot, in other words, you just put 1 contract on instead of 2, then you have 2 choices. You can simply take the 1 lot and go for scalp trades. Whatever, that 4, 6, 8, you want to just get that off and you're done. Now, when you do that, in the case of where it runs like this did, you leave a lot on the table. And you have to have a very high win rate to make money, because if you're only at 50-50 trade win, and you're only peeling off 6-8 tick scalpies all day long, and let's say your stop is 8 ticks up here, right? Well, then you're just breaking even. The only person making money is your broker, right? You're not making any money. 6-8 ticks here and stop out 6-8 ticks. You're 50-50. So what you have to do in that case is you got to push your win rate way up. You got to get like 70, 80, 90% win rate, and you can peel off a scalp approach. You can do it. On the other hand, if you can't do 2 and you're just going to do 1, then you just always go for the runner. So in that case, you would have 1 filled here, market short on the close of that bar. You would not have a scalp in this case. You would only have the runner right here. This runner. You would do the runner on the trail. No scalp. Now let's look at, just very quickly before we move on, how much money did this trade make? Now I realize it was overnight. Let's just show you illustrative of how much a trade like that how much it would make. Okay, we got 8 ticks here. We were short at 68 even right here, and we got out at Let's make it easy. Let's use a round number. I don't know. 60. Let's just use 60. That's get a bunch of calculators to figure it out. 60 to 68 is 8 times 4. There's 4 ticks. So here's another thing to learn on your instrument. You should know this right off the top of your head. How much, here, let me do a pop quiz. How much is ES worth per tick? So each tick of movement gives you how many dollars? Anybody know right off the top of your head? I'm not even going to count down 5 seconds. You should just type a number in. If you're going to trade these instruments, this should just like come right off the top of your head. Right. Let me put this in here so everybody knows, okay? It's everybody typed in 1250. Perfect. Yes, exactly. So the way this works for ES, and they're all different. Well, some of the equities are all $5, but 1 point of movement equals $50, right? And there are 4 ticks. A tick is a unit of movement in the futures markets, okay? So there's 4 ticks per point. So therefore, each tick equals 1250. So here's a good way to think of it is if you say, well, I really like 8-tick scalps on ES, Charles, I really do. If I get those all day long, I'll be a happy camper. This 8 ticks is worth how much? 8 times 1250, or 2 points times 50. So each 8 ticks is worth $100. So this scalp is worth $100, right? Now, for your runner, the one that went all the way down here, how many? That went from 68 to 60. So that was 8 points, or 32 ticks. And that leg of the trade was worth how much? How much is 8 points worth on ES? Yeah, $400, 400 bucks. So in this case, leg 1 was worth $100 on the 2 lot, yes? And the second one was worth $400, so the whole trade was worth $500 if it executed just exactly like I showed right here. Less commission, of course. So commission, depending on your broker, is $3.50 to $5 round trips. So in the case of $500, it's not like $10 or something off your trade. Now let's look at these other trades here. On ES, you're going to see a lot of this, and I'm going to show Friday in just a second here. But these other ones, you didn't get runners, okay? You got filled out of here, on one of these bars, and if you had, did you get the scalp off? Let's see, 69.50 to 67.50. Yeah, okay, this might have given you 8 ticks here. This one, maybe, definitely 6 or 7, maybe 8, depending on your fill. This one you got filled at 69.50. That bar right there, short, and it got all the way down here to 64.55 times 4, 20. This is closer to 12 to 15 ticks. Now in this case here, if you had the 2 lot, you would have popped down 8 ticks, taken off your scalpy, and then you might have had a runner that stopped out somewhere in here. If you're trading a trend with the 2 lot, like we discussed, right? Now let's skip forward to Friday morning, because Friday morning is different than what I just showed here, and let me show you why. If you're going to trade ES, this is kind of the way you got to look at it. And I personally trade a two range simply because the movement is not large enough to warrant a 4 bar. So in other words, if you're saying that 8 to 12 ticks is a big move on ES, well then if you use a 4 bar, that's only 3 bars. You can't, it's very difficult to take ES trades using a 4 bar. You got to go down to like a 2. Okay. All right, well, let's skip to Friday morning and talk about how ES traded. Now, the equity markets open at 6:30 my time, which would have been right here on this chart. right about here. Where's my vertical line here? Okay, so right here. Now, to prepare for our trading of ES on Friday morning, I'm going to go back to before 6:30 occurred. And that would look like this. I'm going to get this out of the way so it doesn't disrupt our trading for Friday morning. We already know that. Just tuck this out of the way for now. So going into this is how I do it when I'm looking at assessing a pre-market session. And I'll just tell you explicitly what I do, and then we'll do a few together on different instruments. We'll prep, and so that Monday morning you can do your own prep and you'll know what to do. The first thing I do is I try to assess the market condition. Now, in the case of Friday morning, before 6:30, before the market opens, I look at the trend condition, and I notice that what is the trend condition on ES? Up, down, or sideways? Before the open. That's not a rhetorical question. That's an actual question. What is the trend condition? Okay, I got a text box here. I got to type something in here. So in the pre-market assessment of any instrument assessment, in the case of ES on Friday morning, I would type in what? I have to type something in here right now. What would it be? And it can only be three things: up, down, or sideways. Friday morning in the pre-market, and the trend was what? 5 seconds on the clock. You make the call. Monday morning comes along. You're looking at an ES chart in the pre-market, and it looks like this. What are you going to type in? Well, you won't have to type it in. I mean, you just assess it in your mind and know what it is. It's either up, down, or sideways. Or sideways to up, down to sideways. Sideways with an up bias. Up trend, sideways. What is it doing? Monday morning, you're looking at a chart and it looks just exactly like this. And in your mind, you're going to think what? All right, let me help you out. I see some of you might be struggling a little bit. That's okay. I would say up to sideways. Now, if we say that the market is up to sideways, let's first of all, let me show you why I'm thinking that first. Let me do it this way. As I look back from where I'm at here at 6:15 with the market opening in 15 minutes, I can quickly see that overnight in the European session that the market sold off thusly, right? I can see that after this sell-off that somewhere between 1 and 2 o'clock a.m. my time, the market went into a sideways condition like such. Coming out of this, there was not follow-through to the downside, so that didn't break down. Quite the opposite. It pushed up all the way back up to here. Turning the background green, bars are predominantly blue. The mid-band and all the bands are stair-stepping up. So the first part of this, up, is the condition that you see right here. Right? The condition is up. It is an uptrend. So what does uptrend equal? Let's follow through with this. Up to sideways means that what type of trades am I looking for? This is everything. What we're discussing now is everything in trading. If you want to trade for a living, or you want to trade part-time, or you want to make money trading futures markets, what we're going through right now is probably one of the most important things you have to learn and remember. This is like, I mean, if you were going to build a house, and the house, to start the house, you put the foundation, you dig the hole, you know, and you put the rebar in there and you pour the concrete, and the whole house is gonna sit on this foundation. That is what we're talking about right now. If you don't learn this, then you're, all due respect, not to be rude to anybody, you're screwed. You have to know what you're gonna do, because if you don't, you're just wandering around losing money. I mean, really, that's the way it works. I've been doing this a long time. 25 years I've been trading, and this is how it works. In an uptrend, you are buying support. You're getting long only. So that's what goes through your head. I'm taking longs only from support. So that's why we do the assessment. You might be saying, well, you know, Charles, all due respect, I don't have time to sit around and figure all this stuff out. Just tell me where the trades are. Well, it doesn't work like that. It doesn't work like, you can't just say, oh, well, you know. No, you've got to do a little bit of work. You have to look at what the market condition is. Is it up, down, or sideways? Where's support and resistance? And where am I going to look to start taking some trades? If you don't do that simple preparation, then from that point forward, you're lost. This is the foundation of the morning of your trading right there. That's it. So the next thing we do is we take and we put lines on the chart where we see support and resistance. We can clearly see that the swing in the pre-market resistance is somewhere up in here. Now, ironically, that corresponds with some swings from overnight. See them? Where the market rolled over. So there's an old adage most of you have heard, I'm sure, over the years that says support becomes resistance and resistance becomes support. Kind of like floors in a building, right? Now you have a couple areas where you could say there is support. You could say there's a little shelf down here. There's a couple of them. I'm going to keep it really simple. I'm going to say that down here by the mid-band, you could make a case there's some support in here. So in case of the shorts, you got a little bounce here, and then it broke, right? Here was where it kind of broke out. See, it came up, finally broke. Mid-band's sitting here too. Now, there is a smaller place where support is occurring in the short term, and that's kind of right in here. So what we're saying before the market even opens is this. It appears to us for the time being that the trend is up to sideways, meaning we're buying support. We're only taking longs, no shorts. And we have a interim support area right here around 67 and a deeper support area located down by the midband around 65-ish down here. So how and where would we take trades? I'll give you 10 seconds on that question. Now, this is before the market even opens. We have a plan. What I'm showing you is your plan. This is what you are going to do when the market does what it's going to do. So now I'm going to put another box in here, and I'm asking you what? You said you're going to get long from support. That's what you just said, right? So where is that going to be? Where are you going to take trades? This is before the market even opened. Where is it? Where are you going to take trades? You have to fill in the blank here. Hopefully everybody in here and listening to the recording later when it's rendered is taking heed to what I'm help show you here, so that come Monday, Tuesday, and all of next week, that you don't feel like in the pre-market session you're looking at a chart all glazed over like you don't know what the heck you're going to do next, because that's a guarantee you're going to lose some money. With this plan, I'm not guaranteeing that you're going to make money, but I'm telling you your odds are going to go up astronomically because you have a plan. You know ahead of time what you're going to do. And then when the market comes to you, you can execute it. That is the whole idea of making money in the futures markets. We'll give you another 8 seconds. Where are you taking trades? We know it's long only, sideways to up. Where are you getting in? Just type in a number. You see this? You see the levels there. Where are you getting in? Oops, going. Let me fix that. Going. So going to take trades. Time's almost up. 5 seconds. 3 seconds. Where are you getting long from? All right, time's up. So I'm going to go ahead and just type these in. I'm going to say just under 67. 2767, and around midband's located 67. I'm going to say 64 to 60, 64 to 65. Okay, so why am I saying that? Here's our plan in the pre-market session. We already know what we're going to do. What we're saying is this: is we're taking long trades and we're going to buy bounces off of here. If it holds and bounces, we're going to take bounces from here, and we would also take a nice juicy bounce off of anywhere down in here. This is our plan. Until these conditions change, that's a valid bona fide plan. You're going to get long from support, sideways to up. Now, what is the third and final part of our plan? Anybody have an idea? The third and final part of our plan is what? Just type it in. What is it? Come Tuesday, next Tuesday morning, you're looking at ES. You come up with this quick little plan in the pre-market, but it's not quite done yet. It's almost fully baked. Still in the oven at 350. It's getting a little crust on the top. A little crispy crust forming. It's almost ready to come out, but it's not quite fully done yet. What is missing here? How to get out. We know where we're getting in. You just said it. All you typed it in. I saw everybody. Byron, Peter, Dave, Mario, PW, all you. Kenneth. You typed in these numbers. You see it, right? You're buying support here. You're buying support. You're getting long. We know that. So then the second question is, where are you getting out? So in other words, if you get these bounces, these hypothetical, theoretical bounces that haven't happened yet, then what are you going to do? Where are you getting out? Where are you taking profits? This is the whole discussion of why we're having this webinar in the first place, isn't it? What is the topic that we're covering today? So that should help you. I'm kind of telling you what the answer is. Right? What is it? Yeah, that's the final piece to your puzzle of getting this all ready. Now listen, while you're thinking about that, I'm taking an extended period of time of like 10, 15 minutes to explain all this. In reality, when you do this, it's only going to take you, a minute or two. You're going to look at the market as it going up and down. You're going to look at support and resistance, and you're going to quickly say, here, let me just trade management. Is it going to scalp PW? Right, exactly. So what I'm saying, to be clear, is, let me see if I can explain it this way. If the market comes down here and we buy it, let me blow it up a little bit more. See if I can blow this up so I just make it really clear. There, that's much better. I want to make it blow this up so it's really clear. And this is how you got to think of it. This is how I think of it. And it works pretty well most of the time. So what we're saying is, if and when a market comes to a support area and you are going to buy it, you look at where resistance is, which is where you're going to get out. Yes? In the case of here, where would you get out? Here. You know that ahead of time. Before the market is even open, you already have an idea of what you're going to do. You're going to buy support, and then you're going to take profit here. Now, in the case of the lower drop, if the market pulls down into here, where might the market go? If it bounced off of this area right here, where might it go? Well, it could come back to here, yes. Find resistance and roll, might not go all the way up. So wouldn't that be a good scalp to pull one off? And it might return to here. which would quasi be your runner off that bottom, yes? Does everybody understand the logic of what we're setting up here? Does that make sense? Does everybody make sense? So in that sense, I think everybody can see the value of having these lines. Without the pre-market lines, you have no plan, and you are destined to struggle. I'm not saying you're going to fail, but you can see clearly that the likelihood of somebody who is prepared like this to succeed goes up dramatically. If you don't have this, you're flopping around like a fish. I don't know where I'm getting it. So, looks pretty sideways to me. I'm just going to I'll look at some other chart. Maybe I'll go look at gold, whatever. All right, we have our plan in hand. Now, what do we do next? We let the market open and we see if our plan works out. So let me advance the chart. Any questions, by the way, in this prep stage that we have taken here? I see a question there. Well, Paul, what I'm trying to show you here is Paul's question is, if anything, I can just take the mid-band trades. Well, that, I have to tell you that markets don't always come to the mid-band. Okay, and I think that that's one area that we all need to sort of beef up a little bit. Is we've been so weaned on mid-band trades. So for those of you that are visiting and just I see some people freshly coming in, this is the mid-band sitting right here. This is the middle of our bands, our four bands up, 4 bands below, which give form and structure to a market that otherwise wouldn't be there. The reason we need the form and structure is this helps us see support and resistance and helps us make decisions on trades. Now, markets won't always go back to the mid-band right here, allowing you to take trades. They just don't always do that. So we have to be prepared for other market conditions. In other words, a market may, just like over here in the case of the shorts, right? It didn't quite get to mid-band. Are these bona fide trades short? Yes. Could you have taken them and make money? Absolutely. If you waited for the mid-band, would you have had a trade over here? No. You would have missed it. You would have missed that. You would have missed that. You missed all these shorts. Didn't get up there. Okay? So we have to be prepared for shallow retracements, and we have to be ready to take them. Let me advance the chart. Now, what I'm going to do is I'm going to go through the first hour, and when you think that there's a trade set up, type in a T. Okay? We're reconstructing Friday morning on ES, and when you think that there are trades, type in a T. I know, I'm getting ready to advance the chart, PW. Hold on. Here we go. Remember, type in a T. I haven't started yet, Chris. People are typing in T's. Market hasn't opened yet. Let me give you a couple bars and then type in. If you see a trade, type in a T. All right. All right. Here we go. 632. 634. Market's open for 4 minutes. And blow up the chart just even a little bit more. You know what I'll do? I'm going to pull it over like this thing. Okay, there we go. Let's blow up make the bars just a little bit bigger. There we go. Okay, perfect. All right. Okay, remember our plan. Typing in T when there are trades. When you see trades, you're typing in a T. So it would indicate that you know when a trade is actually set up. All right. Here we are at 6:40. We're 10 minutes into the equity market open. There's 6:42. 6:43. 13 minutes into the market open. Typing in T for trades. 6:48. 6:55, 25 into the market open. 7 o'clock. 7:05. 7:17. All right, it's almost 7:30. I'm going to stop right there. How did our pre-market plan work out? What do you think? How many trades were there? How many T's did you type in? How many trades worked out here? Where were they? Well, it depends on how you entered. Now, I have to introduce the concept of what's called fading a swing. Most of you probably already know what that is. Fading a swing is as follows. When you have a support and resistance line that's well established, as it is here in the case of the support and the resistance level, which actually turned out to be more like here. I'm going to do something here. Hold on a second. I'm going to draw a couple lines like this. And I'll explain what they are in a second. This is especially useful in range-bound conditions. You have to learn how to do this in order to be successful if you're going to trade a range and or exit a trade prior to a support and resistance level. It is as follows. What you're doing is that markets don't always, as you can see here, come exactly to the swing level. Sometimes they go a little bit above it. Sometimes they go a little bit below it, right? So what I'm saying is if you put buy orders down here to get long, right at this level, maybe you got in on that one. Maybe you definitely got in on that one. But all these ones that didn't quite hit it, you didn't get, right? So if a support level is sitting here at 67, your buy order is not at 67. Your buy order is higher than that, usually at least 4 or 5 ticks. So your buy orders are going to be in here, 60. So they're saying support's at 67. You're looking at least 67 3/4, even 68 to get long. You're buying here. You're not buying here. Okay. Now, we said that we're going to scalp and take profits up here, but we're not taking profits there. No, that's 70 3/4. You're going to have to come inside of that by at least 3 to 4 ticks to here. 70, maybe even a tick lower. So what I'm saying, the meat of the trade, the long trade only, no shorts, is here. This is where a lot of traders run into tough ground, so to speak. Is they're always, they're trying to put their orders down here and they're never getting filled, right? Thing moves around, you got 3, 4, 5 trades set up and you miss them all, and then you're trying to get out here and you don't realize it's coming back in your face. You're like, what the heck? I'm chasing this thing around. I'm wasting my time. The meat of the trade in a range, you fade off the bottom, 3, 4, 5 ticks, fade off the top, 3, 4, 5 ticks, depending on the instrument. When you have, I'm not trying to be loosey-goosey about that. What I'm saying is this. On ES, you're going to get tight ranges like this, okay? And the meat of the trade is probably going to be somewhere around 8 to 10 ticks. So you're getting in at 67 3/4, and you're getting out at 60 or 70 even. So what is that? 2.5. So that's 10 ticks. Yeah, roughly 10 ticks. Less commission. Slippage is going to be negligible on ES because there's so much volume that your fills are going to be pretty spot on. Yeah, not going to be hardly any slippage. On other instruments where the movement is larger, say the range is 20, 25, 30 ticks, and the support and resistance levels aren't defined really clean and clear, then you have to be a little bit looser. And in those cases, you might have to give it 8 ticks from the top, 8 ticks from the bottom. You can't do that on ES because the range isn't big enough. There's no meat in it if you give a fade it that much. So let's count the trades after the open. 1, 2, 3. This one didn't hit the top. This didn't come low enough. You might have got this, but you didn't get out. So you either stayed in that one or you took this one. 5. 5. Is that 4? Is that 4? Yeah, no, that's 4. So how much are those scalp trades worth in terms of dollars? Well, you had 4 long trades. Each one was 10 ticks. So you made a total of 40 ticks. And how much is ES worth a tick? $12.50. So you made 500 bucks. 4 trades on ES in the first 30 minutes of trading before 7 o'clock, and you made 500 bucks less commission. Pretty good way to start the morning. And not one of these trades felt any heat at all. In fact, your pre-market assessment over here worked out perfectly, didn't it? Now, sure, you left some money on the table with this one. And let me talk about that. What does it mean when I say leave money on the table? What does that mean? You left some money on the table on that trade. What am I talking about? Is there a table and you go put some money on it? Hey, I got 50 bucks. I'll put it on that table. It was a runner, and you missed it. So what does that mean? Okay, look, here's the thing. Occasionally what's going to happen is a market's going to blow through resistance. And if you're in scalping mode, taking 8 or 10 ticks in the middle of this little range, and you don't have a runner on, in other words, it's only 1 lot or 2 lot. That is 1 lot, by the way. Let me just be clear. Per lot. So if you were doing it with, 2 lot, would be $1,000 bucks. If you did all of them with two lot, right? On the 4 trades. Now, so you missed a runner. Okay. Now the 2 lot, it's very tough inside of here. Now if you say, well, can I do this? Can I do this? Peel it off here and have a trail stop? You could. It gets a little messy in a range like this. You can see that, right? So if you're peeling off up here and it bounces and comes back, where are you going to put your stop on the second one if you're trading 2 lots? Well, you'd have to keep it pretty tight. You probably only get 6 ticks on that second one, right? So you're saying you trail. It gets messy. All right. So, when it breaks and runs, you're going to leave some money on the table. That means leaving money on the table means that you missed part of the trade, and you could have made money on this if you had trailed a stop up. But it's easy to say that in hindsight because you were just scalping in here. You didn't know it was going to break up. So whenever it does that, you're going to miss that first pop like that. You're just going to miss it. Okay. That's the way that works. All right, let's do this. Before we close out, any questions on what I just showed here? No, so Mario's asking this. Here, Mario's asking the second how to deal with that. He is saying, here, let me see his question here. Do you still scalp the first? He's saying, if you're scalping in this range, could you have a scalp for 4? And then take the 8 to 10 or have a runner? You could do that, yes. So what you're saying is if you're buying off of here, maybe if you put 2 lot on, instead of going for 2 for the whole way up to the top, could you peel 1 at 4? So here's what he's saying. He's saying, okay, you're filled here long at 67.50, 4 ticks up from there, 67.75 roughly, right in here. And 4 ticks up would be 68.50, 68.75, which would be halfway up, right about here. So that's a quick pop. Take the 4, and then have your second lot sitting up here. Yes, you could do that. Absolutely. So in that case, you wouldn't get the 2 on the 4. You would get half. You make 750, right? So you get the 4 times the 4 plus the 4 times the 10 would be 750 instead of the 1,000. If you did 1 lot, it's $500 with the 4 scalps. 2 lot full thing with the 4 scalps is 1,000. And if you did a 4 tick scalp in the middle on the 4 trades, then you got 750. Yeah. Peel that off there at 4 ticks, 4 ticks, 4 ticks. That is correct. Yeah. So let me advance the chart. You can see that came up, double topped up here. Was this another trade? If you were watching it, you might have caught a little pop there. Came all the way back down to support. Here was your 5th long trade right here. Just before 8 o'clock in the morning, there's your 5th long. Now, by the time you get to here, I think you can see that you have established a new resistance level up here. See it up there? I'm saying here. Let me go back. All right, so you're coming down, you're coming down, you're coming down, you're coming down. You see it hits your support level where you've taken several trades before. You could have boxed it in here. Now, when you took this trade, let's say this is your final trade of the morning. Now, where is your targets? On that fifth long trade from support, where are your targets now? Well, you still have the prior resistance located here. We know that. That's a given. Been hit that all morning long, right? However, we do have an idea that perhaps it could return to here, yes? So in that case, if you take the 2 lot off of here, it's 7:40, so you're 20 minutes before 8 a.m. Pacific time. Now your range is much larger. You still have support at 67, interim resistance just under 71, and more resistance at 73. So in other words, if it behaves like you think it might, that would be your runner right there. This one, the second leg. And that's exactly what it does. See it? Now watch what happens on ES. I traded ES. I made what I'm showing you here is what I actually traded. This is what I actually did on Friday morning. In fact, do you remember me calling those levels? Anybody in the room? Was anybody in the room when I was calling those levels out? Remember? I was saying support is 67, resistance just under 70. You can scalp below 8-ticker scalpers in that range. Remember? Anybody remember that? You do, Byron? You were there. I'm not making this stuff up. I trade this. What you see right here is what I do. This is what I do in the morning. Now look at this beautiful run here at 8:30. Came down, kissed just above the mid-band here. Let's look at this trade and then we'll wrap. And my apologies, I didn't get to gold and NASDAQ, but do me a favor. My next webinar next week, please remind me to start with NASDAQ and gold, okay? So you come down, you come down, you come down, mid-band, just above the mid-band, you put a region box down here. You get filled on the close of that bar right there. There was a secondary entry. ABC, we love these. These are easy to learn and watch. Just watch the markets. ABC. What's ABC? What are we doing? Are we trying to learn the alphabet, Charles? What are you talking about? I learned that in 2nd grade. I don't need to learn the alphabet. What am I talking about, ABC? What am I, in 3rd grade? I mean, come on. I learned the alphabet a long time ago. ABC is the ABC where you pop out of a resistance area. You get the first leg, A, which probably gave you a scalp at least. Let's see. 70 1/4 to 72 1/4, 8 ticks. Yeah, you might got 8 ticks. But then you pull back and it checks the area where it popped. Right here, look. See the wick of that bar right there? Look how it kissed that support level perfectly. What I'm saying, to be clear, is maybe I'm not being clear here. If you miss the initial entry, this is another spot you can get in at very low risk. Very low risk entry. Because there's a likelihood it's, in fact, when you get filled on the close of this bar right here, long, right here, your stop can be right there. You're literally only risking 71 1/4 to 70, like 5 ticks. In other words, you don't put a 12-tick stop on that if you're going to enter up there. You put it just under the wick of that candle right there on the secondary entry. Here's your A, your B, and your C is the follow through the upside. That's what ABC is, right? ABC. Yeah, so your risk is 71 1/4 to 75 ticks. 5 ticks is 62.50 per lot. Now let's see how much money this made. Yeah, so let's suppose you're filled at 71 1/4 and you trail your stop, trail your stop, trail your stop. You know, you're trailing your stop, trailing your stop. It's hard to say where you would have gotten out up here. Maybe if you put it near this swing, you got taken out at 77 3/4. 71 1/4 is 6.5 points. You stopped out up here. Trade lasted about an hour. So you're in this one a long time. This is the C leg, ABC. Here's the C leg of the trade. 6.5 points? Yeah. So let's just put this in here and we're going to wrap it up. So the ES long that we're showing here, this final fifth long trade, was, what did I say, 6.5 points? What's 6.5 times 4? 24, 26? Is that right? And 26 ticks equals how much? Times 12.5. Anybody got a gonculator handy? I don't have my gonculator handy. Is that 350? Peter? Yeah, 6 times 50 is 300 times, yeah, 350. Okay, good. Yeah. Save. I don't have to break my slide rule out. Oh, and that was per lot. So per lot. So with two contracts on that, you would have made $700 roughly, depending on your actual fill, less commission. I mean, how many of you would be happy with one trade that made 350 or 700? Right? If you did a scalp at 8, you know, if you did the scalp at 8, would be another 100. So if you did plus the scalp, it would be 450. So that's in between the two, right? So that'd be 450. Because you got the 100 on the 8 tick pop plus the 26 tick runner. Hey, Bill, we're running out of time, buddy. We're about almost 10 minutes over here. I'm going to have to stop the recorder. Can I ask you a small favor on that one? Can we, whatever we didn't cover here tonight or this morning, next week when I do my webinar, please come in and remind me whatever you want to see before we start, and I'll make sure I cover it. Okay?